Welcome to our channel. Today, we're diving into a crucial topic: how to build your credit score. Whether you're starting from scratch or looking to improve your existing score, these tips will help you establish and maintain a healthy credit profile. Building a strong credit score can open up a world of financial opportunities. Remember, this is not financial advice. 1. Understanding credit scores. Your credit score is a numerical representation of your credit worthiness. Lenders use this score to determine how likely you are to repay borrowed money. The most commonly used credit scoring model is the FICO score, which ranges from 300 to 850. The higher your score, the better your credit worthiness. Vantage score is another popular model with a similar range. Factors influencing your credit score. Credit scores are calculated based on several factors. Payment history, 35%. This is the most significant factor. It tracks whether you've paid your past credit accounts on time. Amounts owed, 30%. This looks at the total amount of credit and loans you're using compared to your total credit limit. Length of credit history, 15%. The longer your credit history, the better your score. Credit mix, 10%. Having a mix of credit types, credit cards, installment loans, mortgages, can improve your score. New credit, 10%. Opening several new credit accounts in a short period can be seen as risky and can lower your score temporarily. Before we continue, remember to like the video and subscribe to the channel. 2. Check your credit report. Your journey to building a strong credit score begins with checking your credit report. You can get a free copy of your credit report once a year from each of the 3 major credit bureaus: Experian, Equifax, and TransUnion. Reviewing your credit report is essential to ensure there are no errors or signs of identity theft. How to access your credit report. Visit annualreport.com to request your free reports. Examine each report carefully. Look for incorrect information, such as accounts you didn't open or inaccurate late payments. If you find any errors, dispute them with the credit bureau immediately. Correcting errors can have a significant positive impact on your score. 3. Open a credit account. If you don't have any credit history, opening a credit account is the first step. This can be a secured credit card, which requires a cash deposit that serves as your credit limit. Use this card responsibly to build your credit history. Types of credit accounts. Secured credit cards. Ideal for those with no credit history or bad credit. You deposit money into an account, which becomes your credit limit. Retail credit cards. Often easier to get approved for than major credit cards, but be cautious of high interest rates. Student credit cards, designed for students with limited credit history. These cards often come with educational resources about credit. Credit builder loans. Offered by credit unions and some banks, these loans are designed to help build credit. The money you borrow is held in a savings account until you've paid off the loan. 4. Use credit responsibly. To build and maintain a good credit score, follow these key principles. Pay on time. Always pay your bills on time. Payment history is the most significant factor in your credit score, accounting for 35%. Set up reminders or automatic payments to ensure you never miss a due date. Keep balances low. Try to keep your credit card balances below 30% of your credit limit. This is known as your credit utilization ratio, which makes up 30% of your score. Ideally, aim to keep your utilization under 10% for the best impact. Avoid opening too many accounts. While it's good to have multiple credit accounts, opening too many in a short period can negatively impact your score. Tips for responsible credit use. Pay in full. Whenever possible, pay your full balance each month to avoid interest charges. Monitor your spending. Use budgeting tools to track your spending and ensure you don't overextend yourself. Stay within your limits. Resist the temptation to use all your available credit. High balances can hurt your score and lead to debt problems. 5. Diversify your credit mix. Having a variety of credit accounts, such as credit cards, car loans, and mortgages, can positively impact your credit score. This credit mix accounts for 10% of your score. However, only take on what you can manage responsibly. Benefits of a diverse credit mix. A diverse credit mix shows lenders you can handle different types of credit responsibly. It demonstrates your ability to manage various financial obligations, which can improve your overall creditworthiness. 6. Length of credit history. The length of your credit history contributes 15% to your credit score. The longer your credit accounts have been open, the better. Avoid closing old accounts, even if you don't use them often, as they contribute to the age of your credit history. Strategies to lengthen credit history. Keep old accounts open. Even if you don't use them frequently, old accounts add to the average age of your credit history. Use old cards occasionally. Make small purchases and pay them off to keep the accounts active. Authorized user. Become an authorized user on someone else's account with a long, positive history. This can add to your credit length and potentially improve your score. 7. Limit hard inquiries. Each time you apply for credit, a hard inquiry is recorded on your credit report. Multiple hard inquiries within a short period can lower your score. Limit new credit applications and shop around for rates within a short time frame to minimize the impact. Understanding inquiries. Hard inquiries occur when you apply for credit, such as a mortgage, car loan, or credit card. They can lower your score slightly but recover over time. Soft inquiries occur when you or a company checks your credit for purposes other than lending, such as a background check. They do not affect your score. 8. Monitor your credit regularly. Regularly monitoring your credit can help you stay on top of your credit health. Use free tools and services to keep track of your score and report any suspicious activity immediately. Tools for monitoring credit. Credit monitoring services. Services like Credit Karma, Mint, and Experian offer free credit score monitoring and alerts for changes to your credit report. Bank and credit card services. Many financial institutions provide free credit score access and monitoring tools as part of their services. Fraud alerts. Consider setting up fraud alerts with the credit bureaus to be notified of any suspicious activity. 9. Dealing with debt. If you have existing debt, managing it effectively is crucial for building a good credit score. Develop a plan to pay down your debts while maintaining on-time payments. Strategies for debt management. Debt snowball method. Focus on paying off your smallest debts first while making minimum payments on larger ones. This can build momentum and motivation. Debt avalanche method. Focus on paying off debts with the highest interest rates first to save money on interest over time. Consolidation. Consider consolidating high-interest debts into a single loan with a lower interest rate. This can simplify payments and reduce interest costs. 10. Benefits of a good credit score. A good credit score opens doors to many financial benefits. Lower interest rates on loans and credit cards, saving you money over time. Higher credit limits, giving you more financial flexibility. Better loan approval chances for mortgages, auto loans, and personal loans. Rental approval. Easier approval for apartment rentals. Job opportunities. Some employers check credit scores as part of the hiring process. Insurance rates. Better rates on auto and homeowners insurance. Building a good credit score takes time and discipline, but the benefits are worth it. A strong credit score opens doors to better interest rates, loan approvals, and even job opportunities. Follow these steps consistently, and you'll be on your way to a healthy credit profile. Thanks for watching, and don't forget to like, subscribe, and share for more helpful tips. If you found this video helpful, please give it a thumbs up and share it with anyone who might benefit. Subscribe to our channel for more financial tips and advice. Until next time, take care of your finances and stay credit smart.